If tax season feels like an ambush every single year, a bill shows up and you're scrambling to find the money, this is for you. I'm for a CPA, and this is week 7 of the Margini series. Today, I will show you the one small habit that turns tax time from crisis into a non event. Quick note before we start, this is general education, not a tax advice for your specific situation. Your accountant knows your number. Okay, let's get into it. Here's why tax season looks like crisis. Money comes into your store and all of it looks like yours. So you restock, you pay your bills, you reinvest, maybe you finally take a little home and it quietly disappears into the business. Then the tax bill lands and there's nothing set aside to meet it. But notice what actually is. It's not that your store can afford its taxes, it's that the money was never separated in time. It's not a money problem, it's a timing problem, and timing problem have simple fixes. So let's fix the timing. Right now, the order probably goes like this: earn, spend, and then scramble at tax time for whatever is left. We're gonna flip it. The new order is earn, set aside first, then spend what's left. The whole idea is take the tax off the top before it ever has a chance to feel like spending money. Same income, completely different outcome because the money is already waiting when the bills come. So how much do you set aside? A common starting point is 25 to 30%, and this part matters, of your profit, not your soul. Your profit is what is left after your cost. So if you cleared $1,000 in profit this week, you will move somewhere between 250 to 300 into your tax stash. Now, your exact rate depends on your income, your business structure, and your state. So confirm your real number with your tax pro. Think of it as a starting point, not a final figure. The point is to start separating the money now. And where does the money go? Not your main account. Open a second account, a free checking or savings account, and label the taxes. This sounds almost too simple, but it's the part that actually works. The moment you set aside in a separate account, it stops feeling like money you can spend. It's out of the balance you check every day. You can't accidentally spend what you can see. And that little bit of friction is exactly what keeps the money there until you need it. Now, let's make sure it happens every time by taking yourself out of it. Don't rely on remembering. Set up a recurring transfer weekly or every time a deposit is. Move that same set aside percentage automatically every single time money comes in. When it's automatic, there's no willpower involved. The system does the discipline for you. So here's your action for this week. 3 steps, and you can knock them out under 1 hour. 1. Open a separate account and call it taxes. Any free checking or savings account will do. 2. Pick your starting percentage. 25 to 30% of profit is a solid first number. 3. Schedule one automatic transfer so it runs without you. Set it once and let it run. That's it. Set it aside and sleep easy because taxes stop being a crisis the moment the money is already waiting for it. If this helped, subscribe so you don't miss the rest of the series. Next week, we're talking about how you actually pay yourself. And if you want to see your real numbers, the free profit calculator at marginifinancial.com. I'll see you in the next one.